Are you like most of the middle Americans, ages 18 to age 40, feeling the strap of cash flow, um, you know, not having enough money at the end of the month to get all the things that you need? Well, cash out home, cash out refinances are a great way to improve cash flow, even if you're taking a low rate to a high rate. Um, to increase cash flow, and I'm going to show you briefly about how that works. So you might need to improve a little cash flow for your overall financial health, maybe saving for retirement, college, or special vacation, and you don't want to borrow more money. You might be surprised at your total blended rates on your consumer debts, even with the low rate you have today on your mortgage. Rates will come back down and increase cash flow even more in the next few years. You're not eligible for a refinance at a lower rate until after 6 months have passed since the cash out refinance. So looking at this data right now, financial distress is completely on the rise. I mean, it's going up faster than it's ever done before. Right now, we've got a little over close to $1.15 trillion in just consumer debt. That's credit cards. If you look at the credit card balance to limit ratios in this country, that is on the rise as well. It's starting to peak out, and defaults are now starting to rise a little bit on credit card debt. Credit card balances to limit ratio and assessed interest. Interest rates are now close to an average of 24%. I've seen interest rates as high as the usury cap rate, which I believe is like 28%. So making your minimum payments on a credit card will never get them paid off. It'll take years, hundreds of years, if you make minimum payments only and don't use your card anymore. So if you have a car or two, installment loans, boats, campers, all those have increased in rates over the last couple of years. And those payments that I've seen on credit reports that I've done are pretty large payments. Even though those are only on a 5 or 6 year term, those payments would significantly, if they went away, significantly increase your cash flow to allow you to pay down on your mortgage or to put money into a savings plan. So I have a calculator that I put this exact scenario into, and I'm going to show you a few slides on how this can make a big difference. So right now, the consumer has a $200,000 balance on their mortgage. They're paying 3.5%. They got a couple of car loans, installment loans, 5 and 6%. I'm not real sure what the average rate is on car loans, but I assume it's at 5 or 6% or even more. Credit card balances of $30,000, which would be 3 credit cards of $10,000 each, or just a couple or one. And in this scenario, came out to a blended rate for all those debts of 6%. So once we go through all these screens, you'll see the improved cash flow. The rates will come down again. One of the reasons that rates are going to be coming down is due to this massive amount of consumer debt that's unsecured. And when that debt starts to blow up and banks basically lose all that money that they're due, it will create a rift, and the Fed will have to react in an emergency situation to bring some rates down. I'm going to show a total cost analysis of an example based on the numbers on that previous screen. So if you look at this screen, the current mortgage I put in was at, well, it was actually at 200, but we're paying off $56,000 in debt. And at 3.5%, the payment with all of their debts, including the installment loans and credit card minimum payments, was a total of $3,092.33. The cash out refinance would, at 7.5% interest rate, would bring that payment down to $2,413.51, which would improve the cash flow by $678.82 a month. I also threw in, just so you could see, if rates do drop to say 5 3/4 in 12 months from now, you could refinance that loan on a rate and term refinance and lower your payment down an additional $400 a month, increasing your cash flow over $1,000 a month. So increasing your cash flow from a graphic standpoint and a refinance plan, the current payments of all your mortgages are $3,092.33. The cash out refinance is $2,413.51, and the rate and term refinance 12 months down the road is $2,014.35. For illustration purposes, I did not put any taxes or insurance in, because those aren't actually costs of your mortgage, so that you can just see the actual cost of the money. If rates drop to 5.75 in 12 months, your savings are $1,077.98 a month from your current situation. Keep in mind, you wouldn't want to run up any additional debt, go out and buy another car just because your cash flow increased. But if you work this plan for 12 months, you would benefit tremendously. If you want to apply that cash flow to principal balance, if you don't have a cash flow issue, but you just want to eliminate these debts so that they'll be gone and you can start paying down your mortgage, you can take that savings, that $600 plus a month savings, $678 a month savings, and apply it to your principal balance under the 7.5% interest rate and still pay off your current mortgage that you had, plus all your additional debts in just 16 years without increasing any other principal payment on your current mortgage and keeping all those other debts. So if you take a quick look at the cash out refinance with debt consolidation, you've got a mortgage, current loan situation is estimated 912 years. I'm not real sure where that math came from, but as I said, with credit card minimum payments, you just reduce the principal very little if you make those minimum payments. The loan situation with debt consolidation in 30 years to debt freedom, total interest paid is $349,612 if you don't apply any extra money to the principal balance. So what does this all mean to you? Right now is an ultimate time to actually get your finances in order. Start building a plan, make it a 12-month plan, make it a 36-month plan, so that you can get your family into a situation where you can capitalize on the equity that you've built in your house in the last 3 years, and quit worrying about losing your 3.5% rate or even lower rate due to the low rate environment previously to the Fed's actions. So let me know if you have any more questions. Feel free to reach out to me. I can run a unique scenario with you, do a soft credit pull, and merge all this information in with a half-an-hour phone call. We can get exact numbers for you and you specifically. Thanks, bye.